Hello everybody and welcome to today's webinar, and firstly happy National Payroll Week 2023 to you all. Today's session will be all about pensions and the pension module. My name's Calvin and I will be one of your hosts and presenters for today, and I am joined by Duncan, who will be co-hosting with me in the session going forward. So let's have a look at the contents of today's session and what we'll be going through. Firstly, it will be with myself, who will be looking at setting up and assigning a pension scheme. So how do you go about setting up a pension scheme and then manually assigning your scheme to your employees? I will then be handing over to Duncan, who will be taking us through the pension assessment, including opting in, opt-out and postponements, and sending pension correspondence, so printing or email letters for your employees, all done through the pension module. So Duncan will be taking you through those things. Then at the end, we do have some example calculations of pensions, which is really useful to know. We will see how much time we've got at the end, because there are a few examples, but they're all found in the handout. So if we can't go through every single one of them, then please do download the handouts, because there are some great examples there. A great way of helping you to understand how it's calculated in order to troubleshoot any pension questions. Then we finish off with some further support options as well as questions as well. And as I mentioned, we will try and get as many answered as quickly as possible, and we'll stick around for as long as we can to make sure we get as many answered as we can. So let's get started and have a look at setting up and assigning a pension scheme. So setting up a pension scheme, you can find your settings, and we are going to jump into the program and demonstrate this. So pension scheme settings. This is where the pension will be determined and how it's calculated, what the percentage amounts or fixed amounts are deducted as well. And there are some key settings which you'll need to know for calculations as well, and we will go through those. I've got a couple of screenshots here about from the program and where you go to set up a pension scheme. But as I mentioned, we will have a look at pension schemes in detail. Then, once you've got your pension scheme set up, you will need to assess and then assign your scheme to your employees. So the first thing is assessing your employees. Are they eligible, or are they non-eligible, or are they entitled? And then you'll be assigning the scheme based on that eligibility. Eligible employees, as you may know, must be enrolled, so you will need to assign that. When it comes to the assessment, as I mentioned, Duncan is going to be going into that in more detail by using the pension module and showing how that does it all for you. If you are doing it manually, there is the legislation settings, which we do have a screenshot there, which can show you the earnings triggers and the eligibility ages there. So you'll be using those two things to determine whether or not your employee is eligible, non-eligible, or entitled. And if you're doing it manually, the Pensions Regulator website is a great resource to have a look at as well. Once you've assessed, it's time to assign. So if you've got the pension module, the pension assessment is going to do that for you, as Duncan will be showing you. If you haven't got the pension module, then you'll need to do this manually, which is what we're going to be going through in the demo. And speaking of which, we're going to jump into that now. So you can see there, we've got a screenshot from the employee record where you'll do it, but I think it'll be better to show you it in action. So let's bring up our Sage 50 payroll. Here we are in our program. First thing we need to do is set up a scheme or amend a scheme. So we have company in the bottom left here already selected. If you haven't, select it here. Then go to pension schemes in the top left here, and you'll see this window up here. Now we have already got a scheme set up for Nest pensions. Pension providers may vary, of course. And you'll also have these default schemes. So these are sort of schemes that are set in that are just defaulted. If you want to create a new scheme, highlight one of the defaults and click edit. I'm going to edit our Nest pension to show you one. So we'll click edit. You can click new as well, which would add on another one. So number 11, as it were. Let's click edit. We'll ignore that message for the demo purposes. And here we have our window where you can set the scheme settings. The details, you can give your pension a description. Now that can be whatever you like. So we've called it Nest pension. It could be workplace pension, whatever you prefer. It's down to your preference. We've got the type set as other, Now, bear in mind on this particular section and setting up your scheme, the details that you find in here and that you need to select are determined by your pension provider. So I can't stress enough, we can't answer what you need to tick or select in here. It's your pension provider who will be able to do that. What we'll show you is where you can go to do those specific things, okay? So if you're not sure about the type of scheme, speak to your provider, select it from the drop down in here. The two tick boxes I want to draw your attention to are these two. So is it a qualifying scheme? Does it qualify for workplace pensions? Yes, so we'll tick that. Secondly, does it use qualifying earnings? Now this is one of those tick boxes that you'll see is important when it comes to the calculations a bit later. So yes or no, if it does, tick the box. If it doesn't, untick the box. Is it a salary sacrifice scheme? Yes or no? So again, if it is, tick the box. If it isn't, leave it unticked. Those are the ones I wanted to call out to your attention there. Then we'll move on to the employee tab. And in here, there's only two things I would like to draw your attention to, and that is the contributions. So you see here, we've got a drop down for either percentage or fixed amount. Now we're going with percentage of 5%. So we're going to go with the legislative minimums, which is 3% employers and 8% in total. So remember, those are the only two minimums. So it means you can have 4 and 4, you can have 3 for employee, 5 for employer, as long as it's at least 3 for the employer and the total amount adds up to 8. The other thing is this tick box here. Do you want to deduct before or after tax? Now again, if it's before tax, you'll be ticking the box. If it's after tax, you leave it unticked. And again, this is one of those ones which affects how the pension is calculated, which we'll see later. Employer, very similar. Select the contribution amount. Is it a percentage or is it a fixed amount? And then you have your provider details here as well. So we've only got our provider's reference and provider name in here. Again, that's all we've popped in. So we click OK to that. That's our pension scheme set up. So fairly easy to do, but as I mentioned, you will need to get some details from your pension provider if you're unsure. Once you've set your pension scheme up, it's now time to assign it to your employees. So we have a new employee that we've added who will need a pension assigned. Now we have assessed it. I've skipped that because Duncan will be showing you more of that later. We have assessed this employee manually and realized that they are eligible. So we need to assign a scheme. So let's jump into the employee record. I right click and select open employee. Some of you may double click. There's no right or wrong to that. So if you saw me do it slightly differently, don't worry. Then we're going to go along to the pensions tab. And you'll see here we have no pension scheme set. So let's go ahead and click manage schemes. Then we're going to click add and we get this window here. So we've got our scheme reference. So let's click the drop down and you can see a mini version of what you saw earlier with all the defaults and the one we set up. So we'll highlight Nest Pension and click OK. You'll need to enter a joint scheme date and an active membership achieved date. Again, that's for your pension provider. This is default. What your process date is, it tends to be your payday, but I would always check with your pension provider for that one. And you have the contributions amounts. Now you can amend these on an employee level. So for this specific employee, you can amend those contributions for that same scheme if you need to. So you can change that to a fixed amount, add a voluntary contribution if your pension provider allows it, and employer contributions as well. And the last thing, make sure primary scheme is ticked and then click OK. There you'll see our pension scheme has been added with a from date and a blank to date. Click close, hit save. Your pension scheme has now been added. So that's all there is to it for adding a scheme to an employee. So with that being said, it's now time to bring Duncan in, who's going to take us through the pension assessment and the pension module. So it's over to you, Duncan.
Thank you very much, Calvin. So I will just show my screen. And what I'm going to be taking you through is the pensions module options, which is designed to automate many of your auto enrollment duties, and just to make your life that little bit easier and help you with all of those employer duties. So first thing I'm just going to run through is a bit of a recap of the criteria to be automatically enrolled. So Calvin touched on this in his section just now. But if you look at the current slide, you'll see that a worker category is based on an employee's age and wage. It's an easy way to remember it. And to be eligible to be auto-enrolled, an employee's age must be between 22 and state pension age, and their wage must be over £10,000 per year, or the weekly or monthly equivalent. So that green square at the top where it says eligible job holder is where most of your staff, I would imagine, will fit in. And anything outside of those criteria, so if they're younger than that age range, or if they're earning below the earnings trigger, that £10,000, would either put them into a non-eligible job holder category or entitled worker. Now, that's just for information. You don't necessarily need to do that yourself if you have our pensions module, as the pension assessment option is designed to identify all eligible staff and to ensure that they have been assigned a qualifying pension scheme if they haven't previously opted out or left a qualifying scheme. So this becomes part of your payroll process, the pension assessment, and it can also be used to help you process opt-in requests where employees ask to join the pension, opt-out requests where an employee is leaving, and if they do that within a month of being enrolled, you also need to process a refund for them. And you would use it to apply postponement, which is something an employer can do. So it is the employer's decision, and it allows you to delay the enrolment of employees that have triggered enrolment by up to 3 months. So common scenarios where you might use postponement is when taking on new starters who are on probation or perhaps short-term workers, or for employees with a pay spike. So if they are usually earning below the earnings trigger and they have a one-off type payment, maybe an annual bonus that puts them above the trigger, you can postpone that enrolment to the next pay date, for example, when their pay is expected to return to normal. So we're going to take a look at this option and where it fits into your payroll process. So I'll just bring the slides down. And first of all, there were a few questions asking about how do you know if you've got the pensions module or not. So I'll just show you a couple of ways to check that. So first of all, if you take a look in an employee record and have a look on the pensions tab, if you've got the pensions module, you'll see information here on the right-hand side about statuses, whether they're eligible or not, and it also shows a history of pension activity in this section at the bottom. And also to check if you've actually set it up, if you go to your company tasks and open pensions module settings, if it opens up a settings page like this, that again would confirm that you have the pensions module and that you've set it up. So this is where you initially recorded your duty start date or staging date, and it's where you've set a default auto-enrollment pension scheme. But back to our day-to-day payroll. So where does the pension assessment actually fit into the process? Well, you can look down the payroll tasks and you'll see that the pension assessment comes immediately after you enter your employee's payments. So the age is recorded based on the date of birth, the wage is recorded when you enter payments. So the next logical step there is the pension assessment. And for any new users or those that prefer to see a process map, you'll also see the sequence of events in the process map. So once you've set your process date, you've entered the payments, pension assessment becomes your next step. So I'm actually at that stage in my pay run. So I'm just going to get everyone selected and I will just set my process date to my September pay date, which will be the 30th of September. I've been through and entered everyone's payments. So my next step will be to run the assessment. So if I click on this option on the left-hand side, it'll then come up with a prompt asking me to take a backup. So I do strongly recommend you take a backup at this point, because if the assessment screen makes any changes that you'd like to undo, often the easiest way to do that is to restore an earlier backup. But just to save some time in the demo today, I'm just going to skip the backup by clicking no. And then after a short delay, we should then see our pension assessment screen. So it looks like there's a lot of information here, but I'll just break down exactly what we're seeing. So it's a list of all the employees that we selected, as you can see here, with their employee reference and national insurance number. And then there's a type column which categorizes each employee into one of those 3 categories. So eligible staff either need to be auto-enrolled into a pension scheme or have been previously enrolled but have decided themselves to opt out or leave that scheme. And you'll actually see, if you look at all of my eligible staff, and there is a filter up here if you just wanted to see the eligible job holders. You see most of them are auto-enrolled, but I do have a few that have chosen to opt out of that scheme. Now, if you want to see how an employee has been assessed, all you need to do is to hover over the little magnifying glass on their status. So you can see for this first employee, their qualifying earnings are above the trigger. So £833 is the equivalent of £10,000 a year. And their age is between 22 and state pension age. They're 42 years old. And actually, they were first enrolled back on our duty start date in March 2019. Now, next up, for anyone who's in a pension scheme, you'll see the pension scheme name. So all of mine have been enrolled into the same scheme. And then it will display the contribution details, so both the percentages and the amounts of the pension contributions. And Calvin's going to take you through how those amounts have been calculated in the final section of the webinar. So we can see at the bottom of the screen the total payment that would be due to our provider based on this pension assessment and based on this particular pay run. And there are some output options if you wanted to save the results of your assessment, either by emailing them to yourselves or to a colleague, printing this screen, or even downloading this information as a CSV. Now, other things to point out is if a change has been detected, either to an employee's category or to their auto-enrollment status, a flag will appear next to their name. So this month, we've got 2 changes compared to our previous assessment. And if I hover over either of these flags, it will tell me the details of what's changed. So we have an employee here whose category has changed this period. So they've become eligible. The reason for that is they've turned 22. So previously they were too young to be auto-enrolled. Now they need to go in. And as such, the job holder has been automatically enrolled this period. And for the other employee, this is a new starter. They've met the criteria to be enrolled. And for that reason, at this stage, they are being enrolled into the pension. Now, a quick tip, if you've got a larger payroll than mine and you want a quick way of checking for any changes, you can come back to this filter and I can see I have 2 changes this period. So it's a great way to monitor your employees' age and earnings for any changes. And there is a quick search option if there's a specific employee you're interested in. Just type a few characters in their name and then it'll show all matching records. So that's the basics of a pension assessment, but you may have noticed at the top here, we do have options for opting in, for opting out, and for postponement. So I do want to briefly cover what each of those options do. So if someone hasn't been auto-enrolled, they still have a right to join the pension scheme, which is known as an opt-in request. And if they have written to you asking to be put into the pension scheme, you'll need to record these details so that they can be put into the pension scheme and then the information can be sent over to your pension provider. So if there's an employee that wants to opt in, it's just a case of selecting them in this list. So I'll just pick out one of my non-eligible employees, employee 7 here. I could click opt-in/join. We can enter the date we received the opt-in request, and we can choose the pension scheme that we want to put them in. So once I've got both of those details entered, I can attach any supporting evidence. If there's a document I want to attach to the employee record, and then I can click opt-in, which will assign the pension scheme to that employee, and they'll be officially enrolled from the start of our next pay reference period. So you can see the opt-in details have been entered and the enrollment date is set to the 6th of October. And that's because the 6th of October is the start of the next tax period for a monthly paid employee. So opting in takes effect from the next pay period. Auto-enrollment, as you can see here, takes effect immediately from the date that auto-enrollment was triggered. So the next option is opt-outs. So employees need to be put in the pension scheme if they meet the criteria, But if they decide it's not for them, once they've received all the relevant information from the pension provider, they will follow an opt-out process as set out by your provider, and then you'll be notified that they've opted out, and you'll need to enter the details and, if required, process a refund. So I actually have an employee, number 14, who was auto-enrolled last month. So they were put in with effect from the 14th of August, and their active membership began when we sent the information to the provider. So that was towards the end of that month. So they have a 1-month period in order to opt out and get a refund of any contributions made. And because they followed that process, what I need to do is to record the details. So I'm going to select employee 14 and use the opt out and leave option here at the top. For this one, we need to enter the date of the opt out request. So let's say that's come in on the 6th of September. And because that's within the 1-month opt-out window, I can tick a box here to refund any contributions, and that employee is going to get back the £21.67 that was deducted from them last month. So again, we can attach any supporting documents if we wish to, and complete the opt-out request like so. And once it's complete, we'll see a confirmation message on screen. So I clicked a bit too quickly there, but that was your confirmation message. They are now opted out. And you can see here the total amount that will get refunded from the pension provider also includes the employer contribution. Last thing just to show you in the assessment screen is the postponement option. So this is entirely an employer's decision. At the point auto-enrollment is triggered for an employee, be that a new starter, employee with a pay spike, employee who turns 22, you can postpone the enrollment date for up to 3 months. And all you need to do is to enter your postponement date and to write to your employee to inform them of what's happened. So I'm going to select a new starter who we're actually taking on short term. We're not going to be keeping them for very long. And for that reason, we have decided we want to apply postponement. So I'm going to click the postpone button, and then I can choose a date up to 3 months from the date that auto-enrollment was triggered. And it'll show me the last possible date here on the calendar, which will be the 6th of December. And then if I click postpone, it'll confirm that that's been actioned. It'll remove the pension scheme record from their employee record. And you can see that their status is now postponed, and that will expire. Last day of postponement will be the 5th of December. So if you've processed any of these requests and you want to sort of reprint the assessment report, you can select everyone again. You can use the print option at the bottom. But the idea of running a pension assessment is that all of the pension activity is dealt with from this screen. So this is why you wouldn't assign a scheme manually for employees that you take on new. You would rely on the pension assessment screen to do this, and that will then prepare data that could be sent to your pension provider if you're using a supported provider, and it will also generate the required letters for employees being put into a scheme. So quick whistle stop tour, can never say that, of the pension assessment. Let's close out of it at this point, and you'll see that that's returned us to our payroll process, where we can then move on and print our pay slips and reports. So that's just one of the features of the pensions module, and that becomes part of your payroll process. That's why it's right in the middle here, pension assessment. Once you've completed your pay run, so once you've updated the records, which I will quickly do now, and you'll have done your submission to HMRC. So let's assume I've already done my full payment submission. We then have some further pension tasks, which can involve sending pension data to your provider. So there's lots of different ways you can do this. So we're not going to cover that in today's session. And there's the send pension correspondence option, and that is what's going to deal with any letters that are due to the employee. So we'll have a look at send pension correspondence now. So it's available here in the process map. It's also part of the payroll tasks here towards the bottom. So having completed my pay run, I would check for any pending correspondence. And because there's been a bit of activity in that last assessment, we do have some letters that are ready to be printed for our employees. They can also be emailed if you've entered electronic document settings. So for example, if you email pay slips, you'll be able to email pension letters as well. And what we have here is a general notice that will be generated for any new starter, explaining what auto-enrollment is and how it works. There's a postponement letter that we need to send to employees where we've applied postponement. And we've got a couple of job holder letters for employees going into the scheme. So I've got an employee who opted in, I've got an employee that was auto-enrolled, so they need to be informed that this is happening and informed of their rights to opt out should they wish to do that. So any of these letters can be previewed by clicking on the item title. So this is a job holder letter. This is what gets sent to employees that are being enrolled. So it shows them the criteria to be enrolled, the enrollment date, some of your scheme details, and an example of minimum contributions. Also informs them of their right to opt out. And it answers a couple of frequently asked questions on the final page. So this was designed based on the template letters that the pensions regulator provide on their website. So that's just the preview, but to actually print these letters or email them, what you would need to do is to make a selection like so. You would record the date that the communication is sent. So when it comes to enrolment letters, you should only send these once you've sent the details to your pension provider, because this date will be set as the active membership date, and that kicks off the 1 month opt-out window. So in this example, all of these communications were sent or will be sent at the end of September. So it's all before the specified due dates. And because I want to actually print the letters myself, it's not a service my provider does for me, I'm going to choose user, but I'm going to click the send button, which will then prompt me to print these items. Now, the reason that provider is an option is if your pension provider does all of the communications to your employees and you just want to record the fact that an employee has been enrolled and that active membership is achieved, you can record the date that the communication was sent by the provider. You can set that the provider sent them, and you can show these letters as having been sent. But for us, it's user. I'm going to click on to send. If I click send once more, that will then prompt me to print out the letters. So I print out general notice for the new starter, the job holder letters for the two going into the scheme, and finally the postponement letter for that new starter who we postponed. That then keeps a copy of the letter in the employee's record, and it also adds it to the history of letters sent. So we can see on the 29th of September, the following letters were sent out to our employees. So that there is the send pension correspondence option. And that's just two of the main features, the key features involved in the Sage Pensions module. So give you a quick recap of send pension correspondence. So this is available in your handout as well. You can print or email pension letters. You produce general notices, enrolment letters, postponement letters, and every 3 years, re-enrollment letters. So re-enrollment functionality is built into the pension assessment, and we do have a separate webinar that explains how that works. And it keeps a record of all those letters sent. So you've got that audit trail of what was sent and when, so you can prove that you have complied with your duties. So again, more information on this is available from the link in the handout. That's just a flavour of the pensions module. But it is now time for some calculations with Calvin. So we're going to bring him back on the call, and he's going to take you through some example pension calcs. So back to you, Calvin.
Thank you so much, Duncan. So yes, let's have a look at some pension calculations. Now, I am aware of the time and how many questions have come through, so the team will be working tirelessly there to make sure that your questions are answered throughout this, but we will run through some quick calculations. Remember, you can download a copy of the handout today, which does have these examples on, so you can go through them in a bit more detail if you need to. So I'm apologizing if I go a little quick on this one. I'm just aware of how long we have left, and of course how many questions are coming through as well. So calculations wise, there are a couple of things to check before you start calculating a pension, and these are as follows. The first one is, does the scheme use qualifying earnings? So if you cast your mind back to when we set the scheme up and we looked at those settings, it was a tick box on the first screen, the details tab, and that is, does the scheme use qualifying earnings for pensionable pay? The second thing to take note of is the scheme deducted before or after tax? Because this will have an impact on the calculation itself. So these two things are the main things that will be working out your calculations. Qualifying earnings wise, if you go to company in the bottom left and then legislations, you will be able to click on the automatic enrollment tab and then see the upper and lower thresholds. And this is how qualifying earnings is calculated. So remember, that can be found in the program in your legislation settings. So when a pension scheme uses qualifying earnings, pensionable pay is calculated using the upper and lower thresholds. So anything in between those two amounts for monthly, weekly, fortnightly, or weekly are classed as pensionable pay. In essence, you'll see when we get into the calculations that qualifying earnings has a minimum and maximum amount of pension contribution. So we'll start off with an example one. This is your basic one, if you want to call it that. This is where a pension doesn't use qualifying earnings and it's deducted before tax. We've got an employee contribution of 5%, an employer of 3%, with a gross pay of £2,000. Calculation is pretty simple. Your £2,000 is your pensionable pay because it's not using qualifying earnings, so it's your total gross pay, in which case you are taking 5% of 2,000 and 3% of 2,000, which gives you your contributions. That's why I called it the more simpler or the more basic of the calculations with pensions. Now then, we're starting to get a few extra steps in because this pension scheme, well, it uses qualifying earnings this time. We're using the same amounts and it's deducted before tax again. In this instance, we have to deduct the lower threshold. So we know the lower threshold, based on the legislation settings, is £520. Now this employee is monthly, can change for weekly. Again, those thresholds are there. Same principles apply, you just reduce the gross pay by that lower threshold, which gives you the amount over the threshold, which in this case is £1,480. That's your pensionable earnings now. So you can calculate your pension contributions off that new amount. So it's 5% of 1,480 and 3% of 1,480, which then gives you your contribution amounts. That's not all. We've added in an additional example here of when the gross pay goes over the thresholds. So again, same amounts contribution wise. You'll see that's a theme throughout the examples. Again, it uses qualifying earnings, so it's the same as the previous one, and it's deducted before tax. The difference being is this time, the gross pay is £8,000. Now, because the upper threshold is 4,189, anything over that amount is not classed as pensionable pay. So anything over £4,189 monthly is not classed as pensionable pay, which means you can discard that from your calculation altogether. So in this scenario, when your gross pay goes over that, you'll be taking your upper threshold amount, deducting the lower threshold, from the upper threshold to give you the difference in the middle, and that's now your pensionable pay. So with the current thresholds as they are for this tax year, you have a maximum pensionable pay of £3,669 when using qualifying earnings, which again, 5% of that gives you your employee contribution, 3% of that gives you your employer contribution in our example. So there's just a showcasing how qualifying earnings, in essence, has a cap of £183.45 based on 5%. Your percentage contributions can vary. You can increase your percentage, but your pensionable pay is ultimately capped. Now, the next one we've changed one thing, as you can see in green, and this is where it's now deducted after tax, which gives us an additional step in the calculation. Our gross pay again is going to be £2,000. So we also use qualifying earnings for this. And again, the employee is monthly. So we're going to be deducting £520 from our 2,000 like we did earlier. Remember, the concept is the same for other pay frequencies. It's just the values for the threshold that change, which can be found in your legislation settings. So we've got our pensionable earnings once more of 1,480. So we now need to take 5% of that, which is our employee contribution. This time, however, because it's deducted after tax, we need to factor in the tax allowance, which is 20%. So we also need to now reduce that 74, which is your 5% of your pensionable earnings, by a further 20%, which gives us contribution amount of £59.20. Now, the employee doesn't miss out on that 20%. It's added to the pension pot by your provider. It's just they will see a reduced amount on their payslip. Now, we do get a few questions about this simply because of the coincidence of the maths, if I must say. So 5%, if you deduct 20% of 5, which is 1, you get 4. So you get 4%. So often is the case, we do get asked a question about why is my pension showing a 4% contribution when it should be 5? The very first thing we ask is the scheme deducted before or after tax? And that is what you should be checking, because it's after tax, then it's correct. It will show as 4% because of that additional 20% deduction. So hopefully that makes sense. It is just an additional step in the calculation, but it is quite common. And as I mentioned, it tends to be because of the coincidence of the maths. It looks like 4%, and you might be thinking something's gone wrong there. It's simply because when you reduce 5% by 20%, it gives you 4. Okay, so just bear that in mind. If you've got different contribution rates, you're still taking 20% off that amount. It's just not as round a figure as what 5 is. So, and 5 being the most common as well. Employer, completely unaffected. You still take the 3% of the £1,480. So that's an example of deducted after tax. There's that additional step. And remember, these are found on the handout. So I do recommend, as I know I'm going through them fairly quickly, downloading that so you can have a look. And remember, you will get a recording of this session, so you can go over that again if you need to. One final example for you, and it's salary sacrifice. So we're going to calculate salary sacrifice one. So pension, again, we're going to stick with not using the pensionable earnings, or pensionable qualifying earnings, sorry, for this example, but you would still need to do that additional step if you are using qualifying earnings. Gross pay this time being £2,000, and it's a salary sacrifice. So as you can see, the calculation itself remains pretty much the same. So £22,000 your pensionable earnings, which gives you 5% of 2,000, which gives you £100, and then 3% of 2,000 gives you £60. So calculating the pension contributions remains as normal. The difference here is with a salary sacrifice pension, this is what you may see on pay slips, is that the employee is agreeing to reduce their gross pay in order for you to be able to contribute more to their pension scheme, which means what you see on a pay slip is a salary sacrifice amount, but the total pension contribution shows up as employer contributions. It can't be split because that's how it's meant to be. So with salary sacrifice, it's classed as an employer only contribution, hence why you will see the total, both 5 plus 3, or whichever percentages you have set up, as the total amount of pension contribution for employer. Okay, but just know that the employee is reducing their salary by that 5% in order for you to be able to then contribute that amount. Okay, so that's the best way I can kind of describe it to you. But again, we have got this slide and on the handout for you to have a look at later. So that's calculations. So we finished 2 minutes early, but as I can see, I know we have a lot of questions, so we will stick around for as long as possible to make sure we've got as many answers as we can. So we're on to the further support options. So let's have a quick look at those. The first thing is our help center. Hopefully a lot of you have been to visit and are familiar with this, but you can go to sage.co.uk/help, where if you have a question that potentially we didn't get around to today, or if you're like me and it comes to you far too late and you think, I wish I'd asked that question, pop on over to our help center, type the question in the search bar, and then you can search through all of our knowledge base articles based on that particular question. You can also have a look at support guides that will be a great supplement for this particular webinar. You can see there's a workplace pensions section there on the screenshot as well, so you can follow that as well. There are also links to webinars. We have got a special week of webinars, which I will be talking about a little bit this week, but we do run them weekly regardless. So you can find the schedule in our help center in the top right hand corner where it says webinars there. So head on over to that as well. There are videos, and of course you have the get in touch options available to us as well. Last but certainly not least, Sage University. So Sage University is a fantastic resource where you can go to expand your Sage Payroll learning, or if you're a Sage 50 accounts customer as well, you can expand your learning on that particular product if you wish to. Now it's free to register, and you can access a full library of e-learning, bite-sized learning, as well as Sage product certification. So I mentioned the badges, or you may have seen the badges available this week for National Payroll 2023. Well, there are plenty more to be had in Sage University. So if you head on over to have a look at that when you have a spare moment, it is a wonderful resource and it can be done in your own time at your own pace as well. So there's no scheduled times for those. It's just as and when you can. So I do recommend heading on over to that. I did mention the badge for this week, so it is a bit of a one-off. We are doing webinar badges for this particular week, with the criteria being you must have attended 3 out of 5 of our live webinars this particular week. Now, we had 2 yesterday, and of course we've had today, so everybody who's been on today's session still has the chance to earn that badge, as we have one tomorrow o'clock one at 2 o'clock tomorrow, not tomorrow o'clock, one at 2 o'clock tomorrow with Get Your Payroll Done. Now that's with Duncan, so I do hope you all attend that one. And finally on Friday we have a big Sage Payroll quiz at 11 o'clock, which I'll be honest, I know this is quite sad, but I am very much looking forward to that one. It's great to get some engagement from you guys and not just talk at you. And we will be running a quiz with questions, answers, and demos. So I really hope you can make it for that one. It should be educational, but also a little bit of fun as well. Now, it is just for fun. There is no competition, but if you're attending with some work colleagues, potentially, you can have a little internal competition, who knows, for anyone who's competitive out there. If not, it is simply just for fun and, of course, to learn a few things here or there. And it's all about the subjects that we've covered this week as well. So that is how you achieve your badge. And with that, it does bring us to the end. As I mentioned, we are going to stick around a little longer just to make sure we get as many questions answered as possible. It's been a pleasure to see so many of you attend today's session. So thank you so much for that. I hope you've enjoyed it and found it a little bit educational. Don't forget, we do our regular webinars, which take these subjects and go a little bit more in depth if you want to have a look at those each week. If you are leaving us at this point, again, thank you so much for attending. You will be directed to a short feedback survey when you come to leave the session, whether that be at the end or now. And it does mean a lot to both myself and Duncan if you do spend that little amount of time filling it in as well. If you've attended for the badge, please let us know if you are excited about that or what you thought about achieving a badge as well, as it is quite new for this particular format. So thank you for that. And also let us know how the webinar went and what you thought. We can't make changes and we can't even try new things, such as the quiz actually on Friday, which was off the back of some really good feedback we had. So I really appreciate that, and it does mean a lot to us. And I know I probably sound a bit like a broken record when you hear people begging almost for surveys, but we can't make changes without it. So thank you so much. I do appreciate it. I'm going to jump on mute now, help out the guys in the questions. And when we come to the end, either we've answered all the questions or of course we have run out of time, sadly, I will be back to say our final goodbyes, but we will be sticking around just a little bit longer. So thank you as well. And thank you for your patience with the questions. I appreciate there's been a little bit of a delay in getting some answers there. So I do appreciate that. Thanks again, and I'll speak to you soon. Okay, everybody, I've just popped back because it looks like we have managed to get the questions answered that were still here. So thank you so much to those who stuck around to the end just before the hour mark. So we did stick around for about 15 minutes after, so thank you so much for that. The only thing from me to say as well is thank you so much once more. I hope we see you in the next couple of webinars. Don't forget, we've got that quiz on Friday, which I think should be really good fun, as I mentioned, as well as educational, of course. And if, of course, you have attended 3 out of the 5 sessions this week, you will be receiving that National Payroll Week 2023 Processing Proficiency badge that will be emailed out to you from next week. So thank you again. Don't forget about the survey when we end the session, but that's it from me. So I hope you're all looking after yourselves out there, staying safe as well, and hopefully we will see you in the next one. Thanks again, and we'll see you soon.